Okay, good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Nuchauskas. Today's the 14th of June 2018, so welcome everyone. Welcome to this Thursday morning session where we're going to have a look at the markets, what happened with them yesterday, what levels to watch out for today. But before we start doing that, let's quickly have a read through our risk disclaimer. So the content of this webinar does not constitute investment advice or investment recommendation and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Also, a very quick reminder of our JFD Brokers Research page here, which you can go and check us out if you click on jfdbrokers.com and then follow the link towards the research. And yep, it'll take you to this page which we update on a daily basis. We throw out different trading shoutouts, different trading technical analysis, and of course our daily analysis that we throw out every morning. And yeah, please do not hesitate to visit us here, and I think you can find something useful for yourself. But for now, let's quickly have a look at the markets. So the first one I want to touch on actually is the S&P 500. So yesterday we had some news coming out from the US. You probably are all aware of that. So the US has raised their lending rate, their benchmark lending rate, up by 25 basis points. So yeah, we can see that the reaction here, and yesterday we had a slide here to the downside. The equity markets, US equity markets retraced. Certainly we're looking right now at the S&P, and we can see here that this 2790 area continues to play as a nice key area for resistance. So we had a nice push away from it, so now we're more looking bearish than bullish. Certainly, of course, let's not kind of put this to the bin yet, but even though we're having this red day, we had this red day yesterday and we closed in the red. So for now, of course, stay sharp, because we could see maybe something like a reversal back to the upside, and we could start testing these key areas again, the 2790 and the 2800. So for now, be very careful with this bearish candle. It doesn't really mean that from now on we're going to start selling off here, but nevertheless, like I said, be careful. That's probably the only thing that I can tell you right now, guys. For us to become more bullish on this one, we would need to see a nice good break above the 2790 and eventually maybe above the 2800. Certainly we would prefer to see a nice close above these two levels in order to kind of consider further upside moves. But for now, like I said, we're just observing this one, and of course, if this continues to push lower, then keep a close eye on this 2742 mark, approximately there. It acted as a good level of resistance in the past, could act as a good level of support this time. Also, we can see that the 21 EMA is approaching that level as well. We could maybe see something like a slide lower again, but this is where probably the price is going to stall. Well, the rate is going to stall a little, and we'll just have to evaluate it then if we get to this point. Looking at the Dow quickly, I mean, certainly similar stories here is developing here. We're seeing this this red, this negative candle, this negative daily candle forming yesterday, and of course, certainly for now, we're keeping a close eye on this key area of support at around 25,100. Now, a break below that could send this index a little bit lower, maybe towards this 21 EMA first, and then a little bit lower. But for now, keep a close eye on this 25,100. Let's see what it wants to do with that one. On the upside, we do have this another good area of resistance, the 25,450. A break above that could open the path towards these higher levels, especially towards this 25,800. Looking at the FTSE 100, yesterday it seemed it seemed that it wanted to continue pushing higher, and we had a nice candle forming here, a bullish candle forming, but you can see we've sold off and we've kind of closed with this doji, and of course now we're just continuing to monitor it, and let's see what it wants to do, because like I've mentioned in my previous videos, this index is at a really let's say annoying spot right now. It doesn't give us a clear indication where it wants to continue moving. Now for us to become more bullish on this one, we still are looking at this level here, the 77.55, and if we do get a nice break above this, well, we'll start aiming for this 77.95 then, because the 77.95 has been the nice high here that we had in January, this highest point in January. So watch out for these two levels, guys. I mean, the 77.55, a break above that could lead to a 77.95 test. So, and of course a break above that as well, I mean, we could end up testing the recent all-time highs at around 79.03. But before actually we start considering that level, let's see what it wants to do with these two. On the downside, of course, we do have the 76.10 that we're still keeping an eye on. It is quite kind of, let's say, far from where the price is right now, where the rate is right now. So I do apologize, but nevertheless, we could end up moving lower here. This 76.10 also coincides with this lower bound of the Bollinger Band as well. So I mean, a nice break below that could confirm further declines, yep, and we could start aiming for these lower levels like 75.65 or even 74.90. So for now, guys, stay sharp, keep a close eye on this range. Let's see where it breaks out to. Looking at the DAX, we're also quite neutral on this one because we're continuing to monitor it. We can see that it's just ranging here between the between this 12,920. Let me just quickly slightly adjust this number. Oops, wrong. There we go. So we're trading here between this 12,920 and of course this other key area of support at around 12,600. Let me just kind of shift this now highlighted area towards this one. So for us to see kind of nice break higher, I mean a nice move higher, we would need to see a nice break here above this key level. But also, to be honest, a good confirmation would be a nice break and a close above the 13,000, the psychological 13,000. So for now, again, a similar story as with the rest of the indices. We're just observing this one right now, and we need some sort of a better confirmation on where it would like to move in a longer term. Let's quickly touch on gold. And gold is well, yesterday it was trading lower here. Certainly it managed to move here, break this upwards moving trend line that has been running for quite a while now, this long-term upwards moving trend line. And it broke it, but still the price retraced back to the upside. The bulls managed to drive it almost towards, well, actually towards the psychological 1300, and now we're seeing this bullish candle forming, and potentially you could see maybe a move higher here. And also you can probably see that we're getting in a very tight squeeze right now, and this is a daily chart. So I mean, for us to kind of become more bullish on this one, we would need to see a nice move above the 1307 that proved to be a nice key area of resistance in the past. So for now, of course, we're also continuing to monitor this one. I was mentioning this one in my previous videos, and certainly I was talking about the downside as well. But for us to, I'll probably repeat myself, and for us to kind of consider further declines, we need to see a nice close below not only this upwards moving trend line. This, just to remind you guys, this upwards moving trend line has been running for quite a while now, and this is like since December 2016. So but not only below this, we need to see a close below this trend line, but also below the 1290, and this could confirm further declines towards the 1282 mark, and then maybe lower again. But for now, stay sharp, guys, keep a close eye on this one, because we are getting squeezed here, and it should should pop to one of the sides soon. So looking at a few, let's have a look at a few pairs now, and certainly the first one's going to be the euro dollar, and the euro dollar is continuing to push higher here. Yesterday we had a nice reversal here. We had a nice bullish candle forming. Keep a close eye on this area right here, the 118.250. I mean, if we get a nice break above this, could end up moving higher. Start looking at the 118.400, and then eventually maybe towards this upper bound of the Bollinger Band. Of course, if the momentum, the buying momentum is going to continue being strong, then, well, I mean, we could start aiming for the psychological 120 level. Now, certainly, I doubt that it's going to get hit maybe today or something, but still, nevertheless, if we get a nice push here through this key area here, key area of resistance, well, this could open the path towards this higher psychological 120 level. On the downside, we need to see a nice move, a break below the 117.250 in order to kind of consider further declines. Now, the level that we're watching below here is the 116.500, and of course this long-term upwards moving trend line that continues to play a key role here in this pair. So for now, continue watching these two levels, but for now, but certainly, of course, this is looking more bullish than bearish. Let's quickly touch on GBPUSD, and a nice reversal yesterday here. We can see that the bulls managed to fight back, and of course, initially we were trading below this key area that I was talking about, the 133.400, 133.40, but then the bulls managed to drive this pair back, and now we're seeing this bullish candle forming. Certainly keep a close eye on this one today. If we get a nice pop here, and you probably can see that it's probably a time for a good long candle to form. Certainly the question here is, will it be more of a bearish candle or a bullish candle? But let's wait and see. If for us to become more bullish on this one, to be honest, we need to see a nice move here above the 134.70 in order to consider further upside moves. So for now we're just watching this one. It could be a good trade, of course, up to before this level, but again, like I said, if you want to take this trade, then have your stop losses in place. On the downside, we need to see a nice break below the 133.40 in order to consider a move towards the 132.05 again. So for now, keep an eye on these two key areas, guys. Let's see what it wants to do with those. Looking at the USDJPY and the USDJPY, let me just get rid of these arrows quickly. So initially, I was talking about this one yesterday, and we saw a nice move here. We saw a nice move here towards this 110.800 level. I was talking about this level, so I told you guys to keep an eye on it. But we see we haven't closed above that level, and we've retraced strongly back to the downside. So now we're aiming for this this area here at around 109.850. Let me just zoom in a little bit here. So 109.850, guys, keep a close eye on this one, because it also coincides with this 21 EMA that could act as a good area of support. And also just slightly below that, we do have this lower bound of the rising channel, the short-term rising channel that the pair is still within. We could maybe see something like a bounce here, maybe a bounce back to the upside. So, but if we start breaking this channel to the downside, well, I mean, it could open the path towards this this slightly maybe longer term, well, mid-term, I would say, upwards moving trend line that has been running since the end of March this year. We could end up testing that. The first level to watch here, if we get a break below this channel, the first level to watch is the 109.200, approximately there. So guys, I hope you found this useful. I'll have to wrap it up here, unfortunately, running out of time. And as always, keep an eye on the price action, guys. And if you want to join me later on today in my Traders Tea Time at 13:15 GMT, 14:15 British Summer Time. But for now, I hope you have a good trading day, and yeah, see you later. Bye bye.